afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Tomorrow's Fed Day, and it is nearly 100% certain that the Fed is going to cut rates by 25 basis points at 1 p.m. Central Time. So they're likely to do it, but what matters most is their narrative going forward. Is this 3 and done? Previous mid-cycle adjustments have typically, through the 90s, have been 3 and done, but what do they think going forward? Where do they see growth? What's that path into 2020? And there's still December meeting coming around the corner as well. But first in the morning, we're just getting a number of reads, confidence reads, inflation data, unemployment from Germany, all coming out of Europe early on. That's going to move the needle here for the euro, for the dollar, and set a tone. But more importantly, U.S. quarter 3 GDP. It's the first look at 7:30 a.m. Central Time. That's really going to be what makes headlines in the morning. And then right before that, you have ADP payroll. So a lot of data, and there's going to be a lot of data through the rest of the week too, not just tomorrow morning, but obviously non-farm payroll Friday with manufacturing too. So keep an eye on all of this. It's not just about the Fed meeting and the rate cut that's expected, but again, what do we see on growth moving forward, not only here in the U.S., around the world, a number of reads that are going to move things. So on the charts, what do we see? Well, the dollar index, it rallied from the 97. 97 was a bit of a previous breakout move, not a pure breakout, but is where the market really started to extend. 97 became support. It held that. So we've seen a little bit of a rally here in recent sessions, in recent weeks, off that 97 level. And it's been stalling so far over the last couple of sessions at resistance. And where do we see that? 97.80, 98, that's where there is some solid resistance. You got a number of indicators there. Retracements, the 50-day moving average, previous breakdown points. So you got a lot of resistance here, and what's going to happen, what we're seeing here is very much of a neutral tone in the chart. We've been more bullish the dollar just because it's been in an uptrend. So, but if we break down below 97, we start making new lows, it's going to be doing so for a reason. Obviously, looking at the GDP data and then through the Fed, it's going to be doing so for a reason. You're going to get some follow-through down below there. Same way if we start moving out above 97.80, 98, you should be able to see some follow-through and into non-farm payroll on Friday. So we're looking at that in the same way we're looking at the euro to the downside. The euro has found some good support. It's trendline support coming in at 111 and a quarter. You have the 50-day moving average down there. A number of indicators lining between about 111.10 to 111.40. That's just a sticky area where the euro has responded from. Now, 111.80 was previous resistance, a level that we said we wanted to fade the euro at. It was tough because it reached there going into a weekend ahead of a Brexit vote and then ahead of the ECB meeting. But it turned out to be the right type of trade, just not right for the calendar that we were looking at. But ultimately, because we've held support, if this thing starts to move up and we get into, back to 111.80, back to 112, this could extend. And really, where does it take you? It could see a move to 113. Now, again, it matters what the dollar is doing and what's that narrative behind it. But we're at a point here where the euro has trended higher and the dollar has trended off lows. And ultimately, where are we going to see more of a directional move now? Is there a bigger failure in the dollar building, or is there a bigger, move building in the euro? So we're going to get some answers to these questions heading into tomorrow. It's going to matter, and remember those levels. Now for the yen, the yen's really a bleak story here. We've seen safe havens get a hit. The U.S. equity markets making all-time highs. There's no need for safe havens, but ultimately we're looking at gold and the treasuries as somewhat constructive, looking for a little washout as a buying opportunity there. We don't like the yen. And again, the dollar has been in more of an uptrend. The yen has broken some crucial support levels, 92.70, 92.50 area. You got to close back above there in order to start neutralizing some of this weakness. But the path of least resistance, as long as equity markets remain at elevated the way they are, path of least resistance to the yen is to 91. So keep that in mind. We would rather be buying other safe haven assets. And then the Aussie dollar has moved very well recently. Now, we did put a trade out last week from our research department. 68.30 was the buy, and ultimately it's moved up. Really, if you're in that trade, you want to start rolling your stop up on that. There's CPI data coming out of Australia tonight, so that's going to move things too. We look at China data Wednesday night. It's going to be key for the Aussie dollar as well. And then over the overall tone that we see from the U.S. dollar tomorrow, and as long as risk assets remain bid, so that's what's important. And then the Canadian dollar, it's moved very well. There's definitely a ton of resistance, 76.5 to 77. It's been a big level. Previous peaks. The Bank of Canada meets tomorrow. They're not expected to do anything, but they could set a little bit of a tone. Are they upbeat? I mean, employment data has been really great, but the economy has somewhat stalled. So where's their narrative? And that's going to move the Canadian dollar as well. So there's a lot of volatility in the Canadian tomorrow. So they're going to be make or break. Do we break out above 77 and can we run, or is this a failure that ultimately goes back down to see 75 to 75 and a half? So keep an eye on a lot of moving parts there, and then not to mention Wednesday it's crude data too. So you got some movement of crude to look for as bringing volatility to the Canadian dollar as well. Give us a call. We're here to help with anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates. You can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thanks a lot.